It's Turnaround Tuesday. U.S. stocks are rallying, but some are skeptical about this rally. We're going to ask Jonathan Corpina for some further insight. Hello, Jonathan. Welcome to Tuesday.
Thanks for having me back.
So, Jonathan, I want to first ask you, why are we rallying today?
You know what? There's so many different factors that are out there, and I don't think we particularly have to look at today. Look at what we've seen last week and the week before. Clearly, we've seen volatility move back and forth, and it's all over the same thing. It's the same like regurgitated headlines of its tariffs, its interest rates, it's China. North Korea came back last week for a little bit. Brexit has been a lot of the conversation. So it's kind of like what's the hot topic of the day, or what's the heavy headline that's pushing on markets. But it seems now that we've rebounded off the lows that we saw earlier in the week and last week. And the market right now feels confident that we're going to get to some sort of resolution soon with China. I, for one, don't particularly agree with that statement, but that's what's moving our market today.
We'll get some insight later this week when Steve Mnuchin visits China for another round of trade talks. Jonathan, what levels are you looking at in terms of where we could possibly gain some more, or even where we can lose?
Right, so I think we spoke about a month ago trying to break through that 2,800 level in the S&P, and 2,813 was the resistance at that time. We got through that and stayed above that. We've been fluctuating back and forth, so I think on the downside now, it is back to that 2,813 level. I don't know if we're going to be able to support it for that much longer. I think this rally today will sell off a little bit tomorrow, but I think as we get towards the end of the week, end of the month, end of the quarter, some window dressing might occur. So I think, if you're looking at levels where I think we stabilize, once again, 2,813, above that 2,845.
Do you think that this has brought in more interest in short-term buying, short-term market action, and has that maybe led to the limited upside in the S&P and the Dow?
I think just investors are so confused as to what moves the market, what is the catalyst, and what's going to be the next catalyst. The many headlines that are out there are certainly market moving, but they haven't had the full overall potential strength to really move the market either way, right? Because these scenarios keep changing and keep rotating. So I think investors kind of have been forced to actually not participate as much as they probably would, because when the market moves like it does today, investors feel like they've missed the boat. And then when you get a sell-off like we did on Friday, they say, oh, this is the big sell-off, there's more to come. So a lot of mixed emotions in this market now.
It is, and it's really frustrating when you're watching one particular stock and you're waiting for maybe some bad news, as weird as it feels like, so it can come in and you can nibble at it. Are there any big events this week, like GDP or anything that you're keeping an eye out for?
We have our normal economic calendar. GDP will certainly be something that will be focused on. But once again, I think sometimes we get this economic data that can be somewhat conflicting to what we've seen in prior quarters or prior months, or other data factors that we try to tie together. But I think what investors should be watching this week is we have a lot of Fed speakers this week, and we had a lot of comments come out of Washington last week. Hopefully this week we get just a little bit more granularity to what they're thinking, what they're looking for, and some insight as to what the next quarter or what the next 6 months are going to look like.
Oh man, I mean, talk about clarity necessary. I was in Miami and I was like, what is happening? It really threw the market off.
You had to throw that in there. You were in Miami, right?
Just wanted to brag.
Yeah, I see. Clearly the Fed has changed tones a little bit, and they're going to remain cautious. They're going to remain data dependent, and I think the dovish tone that we got out of Washington, last week, gave investors a reason to pull back from this market. We saw that translate into Friday's activity, but now it seems like we've forgotten about that. I don't think we should forget about that.
We're finding reasons to justify it.
Exactly. We always do that in trading patterns. When you have an idea, you try to convince yourself that this is the right pattern.
So Jonathan says, don't forget. Thank you so much, Jonathan.
Thank you. Have a great week.